I think the risk reward proposition for Bitcoin in the year 2024 is better than any other time in the history of the asset because you have institutional adoption, you have regulatory clarity, you see capital coming into the space, and yet still you can do the survey yourself. Ask 100 of your friends if they're fully invested in Bitcoin and if they understand it. And if 95 say no, right, I would say do your own research. But Bitcoin's 15 years old. So let's look at other great investments. 15 years after Manhattan was founded, was it a good investment? We could start 200 years after Manhattan was founded. In 1776, roll the clock forward, 1791. Was it a good investment? And was real estate in Manhattan in 1791 a good investment? Was it a good investment in 1865 after the Civil War? Was it a good investment in 1970? Was it a good investment 15 years afterwards in, 1995? Was it a good investment in London 20 years ago? 2,000 years after the Romans showed up in London, was it a good investment to buy London property? Right? I mean, these are scarce, desirable properties, right? It's 15 years late is not late, right? That the difference between the winners and the losers is the winners buy something valuable and the losers are afraid, right? The losers are afraid to buy the valuable thing because it's too expensive. New York real estate was the most expensive real estate in the United States 300 years late, right? It's always been the most expensive. Apple Computer was founded, I think, 1976, around then. 15 years after Apple Computer was founded, was it a good investment, right? Check the price of Apple stock in 1993 or 1996. I think in 1998, Michael Dell told the board they should shut it down, give the money back to the shareholders. But the truth is, at many, many points in time, it was a good investment. I think, as I'd said, the real key is to understand what is Bitcoin's use case. It's digital capital. Well, how big is that? $400 trillion? Right? How much capital is locked up in real estate, equity, currency, bonds, collectibles, trophy assets, precious metals in the year 2024? Right? There's probably half the value of most residential real estate is the monetary premium. It's the capital. So, how do you know this? I give you a little test. Go to Miami Beach, go up and down the beach, and then count the number of lights on in a condo building on the beach. Or go to Monaco and count the number of lights on. And what you'll find is that 80 to 90% of all of the condos don't have lights on at night. So people have huge amounts of capital tied up in these idle assets. And there's a lot of reasons for them, but one reason is because they feel like their money is safer there. So in the 20th century, people basically bought sports teams. I mean, ask yourself, what do rich people own when they get rich? They bought sports teams, they bought real estate, they bought companies, they bought land, they bought timber rights, they bought oil rights, they bought gold, they bought, bonds. They just bought stuff. Why? Because they knew if they left their money in the bank, it was going to dwindle away. Buy anything. They buy Picassos, they buy art, right? They buy stuff. So there was never a perfect digital capital. There was never a digital instrument where I could, if you were a rich Russian and you had a choice between buying a bunch of real estate in Moscow or buying Bitcoin, well, with ex post facto hindsight, looking back for the last 30 years, okay, now let's play that out and you're a rich Nigerian. Now you're a rich, Turk. Now you're rich in Lebanon, right? If you, and we don't have to be rich. Anybody with any amount of money anywhere in the world, right? You've got the last 100 years of history. You live in Germany in 1930. What do you want, a building or Bitcoin? You live in Argentina. What do you want? You want to own land? You want to own a building? You want a company? You want Bitcoin? the currency is going to collapse 5 times in 140 years. 5 times, right? Okay, so this is why we want to study history. If you study history, you're going to find that the currency collapsed thousands of times. In fact, on average, it collapses everywhere. Probably, it collapses everywhere on average every 50 years in the history of the world. And that's maybe me being charitable. So, is it too late? Well, can you actually take all of your property, put it in your pocket, and leave the country on 1 day notice if you need to? If not, then you're probably not too late, right? So if you go through that exercise, you can't take your building with you. You can't take your bars of gold with you. You can't take your stock shares with you. People for a while, they bought paintings thinking I'll roll them up, but, it might not be that easy to, and the average person can't buy Picassos, and they're not quite exactly at the price point. How do you buy $237 a Picasso a week, right? So Bitcoin represents digital property. What's the value of digital property? Hundreds of trillions of dollars. Is it overvalued? Not yet. It's $1 trillion right now. So when it's 100 times more valuable than it is right now, will it be overvalued? Not likely. It's probably still going to be appreciating faster than every other thing you can buy. Why? Because it's better than every other thing you can buy. Show me a hotel you can put in your pocket and teleport. Right? $1 billion of gold is like 3,000 pounds, right? How are you going to move that, right? Right? Give me a company that's going to last through the next 3 CEOs, right? Do you know who the third CEO will be after the one that runs the company now? And do you trust that person? Right? The S&P 500, haven't we established there's a 99% failure rate? These are the winners. There's a 99% failure rate to generate shareholder value amongst the 500 best companies in the world. Now, if there's a 99% failure rate amongst the 500 best companies in the world, then what's the failure rate amongst the 100 million companies in the world? And, what's the most successful nation-state currency in the history of the world? Well, if it's the dollar's lost 99.8% of its value in 100 years. Maybe 99.9% of its value. You could debate whether it's 99.8 or 99.9% of its value. Every other currency in every other country lost 100%. So, if you're sitting around wondering, is Bitcoin overvalued? The question is overvalued versus what? Right? You're going to buy something, right? You're owning something in lieu of Bitcoin. What is that something which is better? Right? That's the real question. Because not selling is buying, but not buying is selling, right? And you've basically got a certain amount of economic energy. It's deployed somewhere, right? And the question is, what are you invested in that you think is better? And I think everybody's got to answer that question themselves. But, like if you owned a football team, like what's the odds that people are still going to watch football in 250 years? And what's the odds that you can put the football team in your pocket and leave the country? Not high, right? I mean, and what's the odds that, you get attacked by, what if there's some law that says that you're liable for the physical damage and the emotional harm to the football players? And, if someone gets hurt playing football, you have to pay $100 million settlement, right? That happens. Or even better would be, what happens if someone goes to a football game, watches it, and is traumatized by all the violence, and they form a class action lawsuit and they sue you? Mightn't that happen? Happens all the time. Right? Look at the history of opioids. Look at the history of cigarettes. Look at what's going on right now at congressional hearings around social media. At some point, you'll have trial attorneys suing tech companies because someone used a website and something bad happened to them, right? So there are a lot of risks no matter what you invest in. If you think you don't have risk, you're simply ignorant of the risk you're currently embracing. And I think that once someone understands fully all their range of risk, then your conclusion is, no, it's not too late to buy Bitcoin.